Well guys, it has gotten so serious out there that I can't even do a holy smokers for this video. I can't even do a joke for you. I mean, it has gotten super serious, and I mean super fast, okay? Oil prices right now are down over 31%. I have never seen a 31% move in my life, okay? At least not that I remember. I never remember the oil price being down 31%. I remember some big moves in the oil market, 5%, 7%, 8%. I don't ever remember in my investing career, which is like I started 2008, 2009, a 31% move. Brent is down 29%. This is insane. I had to look this up just to see if I was like tripping. I'm like, this is like extraordinary stuff that is going on right now, right? And sure enough, this is the biggest drop since the Gulf War in 1991. In 1991, guys, are you kidding me? I was 2 years old back then, okay? The biggest drop since 1991. This is extraordinary stuff. Why is this? Oil prices just plunged more. And by the way, it's a lot bigger than just oil prices. We're going to get into the stock market, cryptocurrency market. It's getting bad. It's getting bad, and it's getting bad really fast, okay? We're going to get into all this. Hope you enjoy. As always, smash the thumbs up button. Leave me a comment on, whatever. Oil prices plunged, at this point, I don't even care. Oil prices plunged more than 30% after OPEC's failure to strike a deal with its allies regarding production cuts caused by Saudi Arabia to slash its prices as it reportedly gets set to ramping up production, leading to fears of an all-out price war. An all-out price war in a time where everybody says no one's going to be taking cruises, right? They probably used a whole lot of oil, right? And everybody's going to be scared to obviously fly, right? With the whole Rona situation, everybody's talking about who wants to fly somewhere right now. Business travel is coming to pretty much a complete halt right now. Business meetings are being canceled left and right, and people aren't going on vacation right now because of the whole, obviously, the Rona situation. And also, if people aren't going in and they're not flying, they're not taking cruises, they're probably not going to take car trips either, and to stay at some hotel that might have the Rona, right? And if everybody's so scared about this, there's going to be no travel happening. And meanwhile, we're going to have an all-out price war at the worst possible time to have an all-out price war for the oil prices. Like, that is unbelievable. And so I can definitely understand why, oil prices down over 30%. Now, this gets really bad, guys. This is way worse than it looks on paper, okay? Let me explain exactly what's going on here, okay? This has turned into a scorched earth approach by Saudi Arabia in particular to deal with the problem of chronic overproduction, says this gentleman. The Saudis are the lowest cost producer by far. This is facts. This isn't an opinion. This is facts, okay? There's a reckoning ahead for all other producers, especially those companies operating in the U.S. shale patch. We're going to come back to that. I underlined those words there because that is very important. We will come back to that, okay? On Saturday, Saudi Arabia announced massive discounts to its official selling price for April, and the nation is reportedly preparing to increase its production above the 10 million barrel per day mark, according to a Reuters report, okay? They're going to increase production in a time when basically oil demand is going to fall through the floor, especially if this Rona thing keeps going on and keeps going on, okay? The kingdom currently pumps 9.7 million barrels per day, but has capacity to ramp up to 12.5 million barrels per day. So they're going to increase the supply, and demand is going down literally pretty much day by day as of right now. And if the Rona situation gets far worse, the demand's going to drop so substantially. Meanwhile, production's going way up. The only place for price to go right now is down and down and down and down. Now, this is such a big deal, okay? And let me explain why this is such a big deal, okay? The bill is coming due for a ton of the players that basically play in the North American shale play, okay? North American oil and gas companies have more than $200 billion of debt maturing over the next 4 years. $200 billion of debt maturing in the next 4 years. And that's for the oil and gas players just in North America, okay? Starting with more than $40 billion this year in 2020, guys, okay? And if those players can't make any money, let me just explain this real simple, okay? If those players can't make any money, they can't pay their debt. Guess what? They're going to have to default on that debt. And guess who ends up taking all the hits on that? Just all the big banks out there, all the big US banks more than likely that loaned those oil and gas companies all that money. That's going to cause the banks to take some massive hits on their balance sheets and potentially, and go ahead and start constricting how much they lend potentially. This is all, hypotheticals, and we'll see what happens. But I'm telling you, none of the oil and gas players are going to be making any money at the current prices. They're going to be taking huge losses. They're taking huge losses. How are they going to pay their debts? Just like flat out. And if you're thinking, well, maybe they'll just take out more debt, I don't know. If oil prices are in the 20s, why, even as a big bank, why would you even, loan them money? It's kind of like throwing good money against bad, I guess you can say, because if Saudi Arabia is just never going to allow these guys to make any money, then what are you going to do? Like literally, what are you going to do? And so you have banks potentially taking some massive hits. Then you have the oil and gas sector is a big employment opportunity, obviously in North America. Now I've seen conflicting numbers. I've seen 880,000 different people are employed by the oil and gas sector. I've seen some where it's like 1.5 million. I'm getting very conflicting numbers, but needless to say, if you're thinking about how many people are employed in North America, just the United States alone, in terms of oil and gas jobs, it is a substantial portion, okay? And if those jobs are lost, and a lot of those are, decent paying jobs, then obviously those people become unemployed. And if they become unemployed, they need to find a job somewhere else, and those people stop spending money in the short term. Obviously, that's not a good situation, okay? By the way, as I'm prepping this video out, oil prices continue to go down. Now oil is down 33%, okay? And Brent's down over 30% now. It's getting worse literally just as I'm doing this video here, okay? And by the way, we haven't even talked about the stock market yet, okay? Dow futures are down over 1,200 points, which might be the biggest, move I've ever seen the Dow down ever, in terms of at least a point number, like 1,200 points for the futures market. That's why I'm recording a video for you on a Sunday night, okay? I don't ever remember recording a video on Sunday night. I might have over the course of the past 4 years or whatever I've been on YouTube, but I don't think I've ever recorded a video on a Sunday night. Like, this is crazy, but this is extraordinary stuff. Full-fledged panic is in the market. Let's not confuse ourselves. Full-fledged panic is officially in the market. When you see oil prices going down, when you see the markets like this, another 5% downward move for the S&P 500 it's looking like. NASDAQ's looking like it's going to take a 5% dip tomorrow. We see the 10-year treasury a little over 0.5%. What in the world, guys? And this comes just after the Dow just fell 3,700 points in just the last 3 weeks. So it hasn't been like, oh, everything's been great, and now all of a sudden we're gonna have a bad day. Like, things have been getting rough, and now we got futures down 1,200 plus. Like full-fledged panic is now officially in the market. The US 30-year treasury is under 1%. Now, this was another thing I was like, I don't think I've ever seen anywhere even close to a 1% number or under 1% for the US 30-year treasury. I don't think I've ever seen this before. And so I had to go back, and definitely not in my investing lifetime have we ever seen the US 30-year treasury under 1% or anywhere even remotely close to that, okay? Not even in the financial crisis, not even in 2008, 2009, it was anywhere close like that. Like, this is extraordinary stuff going on, okay? And we got to ask ourselves, is it 2008, 2009 situation a massive global recession? Is this possible? And I gotta say, it is possible, okay? It is possible. When I see this type of panic in the market, I mean, you see something like obviously what's going on in northern Italy right now, 16 million people quarantined right now. Like, just imagine for a moment if the US, which remains to be seen, if this Rona situation gets a lot worse, but just straight up, like if the US has to be shut down for an extended period of time, the whole global economy is going to collapse. There's just no other way around it, okay? There's just literally no other way around it. The entire global economy is going to collapse if the United States just has to shut down all business for, let's say, even if it's for a few weeks, but especially if we're talking about several months, if there's no business going on in the United States, debt still has to be paid due, right? And guess what? It's hard to get the dominoes rolling in the right way again once they've started going in the wrong way. And so if we got into that type of situation in the United States of America, the entire global economy is going to be in straight up shambles, okay? I mean, if China gets in some trouble, it hurts, okay? China's got a big GDP, over $12 trillion. Like, it's a big GDP. If China gets hurt, it hurts a lot, okay? It hurts a lot. I'm talking about company earnings. I'm talking about just overall, wealth moving around. I'm talking about asset prices. I'm talking about overall business. Like, it hurts, okay? If Europe gets hurt, obviously it hurts. It hurts less than China, but it still hurts. The United States gets hurt, and everybody's done. It's as simple as that, okay? The United States is way too important to the global economy. Like, if the US economy has to shut down for an extended period of time because of the Rona situation, everybody's done. Like I'm just putting it, like, it's not like it's an argument. Like this is just how it's going to happen, okay? But the biggest question is, how bad does the Rona situation get? Or are we at like a peak fear for the Rona situation? Does it get worse? That's the whole question. And that's the whole chips on the table right now. And if it gets a lot uglier, then, it's just going to be bad. Okay, oil price is now, it's gotten even worse. It's now down nearly 34% as I'm still prepping this video, okay? Brent's now approaching down a 31% move. And so you have straight up panic in the markets, along with the possibility that the US economy could shut down for an extended period of time. And that is what's very scary right now. When you have this full-fledged panic in the market. Like, this is not like a normal correction now at this point. It was starting to act like a normal correction. A move like we just had right now, this is straight panic. 33% move down in oil, that's panic moved, okay? That's not a natural correction. It's straight up panic, okay? Over $21 billion were just wiped out of the cryptocurrency markets in the past 24 hours. In the past 24 hours, Bitcoin fell over 8% in the last 24 hours. Other big digital coins such as Ethereum, Ripple, Bitcoin Cash posted double-digit losses, and the losses are even bigger than obviously that publication had it, because I went to CoinDesk. Bitcoin's down over 10% right now. Ethereum's down over 14% right now, and this is just in the past 24 hours, okay? Ripple's down over 12% right now. Bitcoin Cash is down 17.5% right now. The US Fed funds rate's going to zero. It's going to zero. There's no other way to put it. I mean, they keep bringing it down. It's gonna go to zero. That's just, I don't see any way around it as of right now. The United States federal funds rate is gonna go to zero, and it's probably gonna go to zero very, very soon, okay? Now, what can we learn about all this? What can we learn about a situation like this? We gotta learn, obviously, to always keep cash on the sideline, okay? I put out a video, didn't get any views, unfortunately, why I'm cash heavy going into 2020, talking about cash levels. It is so vitally important. And I know when it's a hot market, like we had into the end of 2019, even moving to the beginning of 2020, you can look really stupid holding a ton of cash. Like I got up to like 30% cash. People are like, you need to have it in the market, man. All these stocks are going up left and right. I'm like, I got a lot of my money invested in the stock market, but I got a lot on the sideline. Why? Because something has to give eventually. Like eventually, it's just the way the economic system works. It doesn't go up in a straight line. Something happens. And the Rona situation is the thing that happened. The Rona situation, it came out of nowhere. And all of a sudden it was like, oh, what is this? I don't know if it's that serious. And, obviously it's been put out on the media. And there's still an argument to be made. I know Elon Musk just put out, a tweet a few days ago. It said something around like the Rona situation is, panicking around that is stupid. And I would agree, panicking around it is stupid. It's definitely good to take precautions and things like that. But, for everybody to panic over the situation is a little insane. Okay, but needless to say, that's the thing that came out of nowhere, and that is just, it's thrown everything a massive curveball that, pretty much none of us saw coming. I mean, it just, came out of nowhere, and it's just, I don't know. We're going to see where it all shakes out. And so it's interesting because I went back and I watched this video that I put out over a year ago. It was basically a video, 70% chance of recession in 2020. It's a video where I talk about why I believe there was a, 70% chance we'd go into a recession in 2020. And I watched this video back like a month or two ago, and I was like, oh, I was wrong about that. It doesn't look like we have any recession on the horizon. Man, was I wrong there. And all of a sudden you have a freak situation happen, like with obviously the Rona situation. And all of a sudden now it's like, now I'm starting to think, it might it might be possible. It might really be possible. Between mess of global economies slowing down, I mean, the US really slows in a massive way. It's just going to take everybody down in the short term in a very bad way. I mean, the short-term pain will be immense, and it will likely be much worse than what we experienced in the back half of 2018. The back half of 2018, we had a very good-sized, correction there. This could be a full-fledged crash. Like, this could be a full-fledged crash. There's a difference between a crash and a correction scenario, but it remains to be seen. It's nothing I can, say, oh, I got to sell out of all my assets. Let me sell my house. Let me sell my stocks. Let me sell everything I have right now because, it could be so bad. There's nothing that makes me want to necessarily do that, but it does make me say I have to be very, very disciplined with my buys. And one last piece of advice I'll give to, anybody that's watching this video and is newer to the financial markets or the stock market. Now is your chance to take stock market investing very serious. Way too often, people want to get involved with the stock market, start taking stock market investing serious and like acquiring assets. They want to start doing that when everything's at an all-time high and when everything looks so great. That's the worst time. That's the worst time to get involved with the market. The best time to get involved with the market is when things are bad, okay? It's coming from a guy that got started in the Great Recession. Like, that is the best time because, one, you get great deals. Like you're just going to get the best deal. Whenever the market's super bad, you're going to get the best deals you'll ever get. It's just the way, the most years, the economy is going to work. The asset prices are going to increase. Everything's going to be good. But some years, you get some silly pricing, and we could start to get some silly pricing on stocks. That's one part. The second part is you learn to get some you learn to get some guts, okay? You learn how to handle these situations. You learn how to handle a volatile market. It's very easy if you're somebody that gets in the market in 2019 and stocks just go up and up and up almost every day, it seemed like in 2019, right? The real players, are the people that can go through a volatile market like we had, obviously, 2008, 2009, 2011 was a pretty crazy market. We had a pretty crazy time in 2015, I remember, in the summertime of that year where there was a lot of worries out there, and I remember Apple stock fell to like $92 that particular time. At the end of 2018, we had a pretty serious correction that scared a lot of people out of the market. Those are the type of markets you want to get involved with, and those are the type of markets you want to take stock market investing super serious. The times when everything looks great, it's not the best time to get involved with the stock market. It's just flat out at the end of the day, guys. So anyways, I want to hear your opinion in that comment section. I don't think I had anything funny for you guys. Sorry about that. But, it is what it is. Serious video. It's on a Sunday night. If it's on a Sunday night, it's got to be serious, like super serious, okay? Thank you for watching. Have a great day.